Sign up today for a 7-day free trial at alerts.chartguys.com. Alright, USMJ video time. Did Canadian MJ in a different video. Find it on the YouTube channel. So we're going to start off with Curaleaf, which has been red for a while now. Almost 2 weeks in a row of red. So at this point, I'm starting to get interested. Not quite there just yet. I'm more interested in names that have daily, hourly, 4-hour RSI levels all oversold. Right now, Curaleaf does not have daily RSI oversold at this point. The 4-hour RSI is oversold, and the hourly RSI is crushed. So in my opinion, the daily RSI is not going to hit oversold this time around. Those shorter-term RSIs are going to cool off with the short-term bounce. If we are going to see daily oversold conditions, in my opinion, a short-term bounce has to take place first to allow for further downside on those other RSI levels. So for me personally, I will be interested if we were to see a red start to the morning tomorrow. And I would just be interested to look for an hourly oversold bounce. Again, not going for any home run, not trying to be a hero, just looking for 2-3% on a move, and knowing that scaling in allows for some wiggle room to not have to nail the bottom to try and get that bounce. But again, have to have experience playing oversold bounces to look for these kinds of trades. I don't know why they're my bread and butter, but they are my favorite kind of trade. I've been trading oil the last 2 days. I've had 4 profitable day trades on oil on big, massive red days. It's just the way I like to do it. So looking at 1097 on Curaleaf, that's the nearby support to be keeping an eye on. When we do bounce, we're just going to be looking for a daily lower high, because anything under the $15 range is a daily lower high. And we now have significant consolidation underway. And when we look at it on the monthly time frame, the monthly chart is consolidating for the first time since the all-time low. Bears in full control on a lot of these USMJ names, and we'll probably see them all bounce together. I would not be surprised to see the next time we're green on Curaleaf, IAN would be green as well, and a bunch of other names. So here's IAN. So I initiated an initial position yesterday, 1 of 3. I did not add today. I was very busy trading Tesla and oil all day, not really paying a whole lot of attention to MJ, but I will be interested in adding position number 2 tomorrow. Someone asked me in the chat room, what do I do for stop losses on plays like this? I don't even think of stop losses unless I scale in all of the positions that I intend to. At that point, I better think about a stop loss and establish where to put it. But I don't establish my game plan on where to put my stop loss beforehand, because I don't know where my entries are going to be. My entries are dictated a lot by the aggressiveness of the bears. So on days like this, I have no interest in entering. And on days like this, big red days, that's when I am interested in entering. So if I were to enter 3 positions, let's just say for example's sake, and we'll just look at ITHUF because that's what I'm trading. I made an initial entry at 410. I could make a secondary entry at 390 if we see a little red tomorrow. Then I'll be in 2 of 3 positions. My third position, let's say I would enter at 370 if we kept dropping. If we start to bounce, my game plan completely shifts. If we start to bounce, the hourly RSI cools things off and allows for the potential of another leg down, which is what we've seen multiple times. Back on Tuesday, that happened. It cooled off the RSI, and then we saw a continuation down after that RSI was cooled off. So what I look to do is scale out partial position into the initial bounce, and that allows me to lower my cost basis. So let's just say tomorrow we drop down to 380. I enter at 390. So my break-even point at this point is $4. That would not be the ideal setup for the bounce to begin. Number 1, I don't have my full position. That's fine. Most often, these bounces take place without me reaching my maximum position, so I don't even worry about stop losses. I worry about where I'm going to scale out into my profit. So if we drop down to 380, I add at 390. My average is $4. If we see that bounce start to take place on the daily time frame, an oversold bounce, let's see. This would be our low down here to 380. We would drop down to that point, and my break-even point would be here at $4. So I would need to see that much of a bounce to be break-even. That certainly looks manageable considering how much downside we've seen, and also considering the daily 12-period exponential resistance, which has been keeping the price contained. There's space for the price to hit $4 before that's even a factor. So what I would look to do is, if I'm in 2 out of 3 positions and we bounce back towards $4, and if we get there fairly quickly, I'm going to sell half of my position at break even, because what that does is free up cash to allow for further entry if we were to continue lower into daily oversold conditions. From that point on, if we see an hourly trend change, I still have 1/3 of my position to take place in the hourly or the daily oversold bounce, and I would lock in a few percent gain, and that would be that. Scenario 2, let's just say things got real extreme because clearly someone is unloading a large position slowly, and I don't know if it's a large shareholder or I have no idea who it is. No need to even speculate. It's just clear that this kind of selling pressure is significant. But let's just say we keep dropping and we drop down. I fill at 390 and I fill at 370. At that point, the daily RSI would be at levels that we've never seen before, and that's possible. So we look back, it would be all-time lows RSI. I guess we would see RSI similar back here where we dropped to 132, and what do you know, next thing you know, we bounce 20-25% after that. So I would have that historical example to be looking at. But what I would do is, let's just say my average at that point would be 390. So we drop down to 370. I'm in all of my positions. I am not going to add any more because that's the cap that I set on myself, so I don't, keep scaling in and have way too large a position and then get stuck in a trap or trap myself. So my average is 390. I would then allocate what I feel is an acceptable amount of $1 loss on my 390 average position to hopefully allow for some of that bounce to take place. But what I'm not going to do is give up on the trade. Even if I stop out, I'm still interested. And I did this in cryptocurrency all the time in 2018, where I made a decent amount of profits playing against the trend in oversold bounces, but there would be times where I would have to scale out on 4-hour oversold bear flags, and I would see very weak bounces, and I'd say, oh man, I better scale out some of this position, and I would scale out at a loss, and then the next leg down, when we confirm that 4-hour bear flag, I re-add what I sold. And that just keeps dropping my break-even point. And eventually, once the real bounce on the daily time frame gets going, I exit that position either break-even or with some small profit. So let's just say, hypothetically speaking, my average is 390. I put a stop loss under 360 at that point. And that just, again, if I trigger and sell my stop, hit my stop and sell at 360, I'm going to be right back to looking for an entry because at that point, the daily RSI levels will be almost at all-time lows, and I would certainly be confident that a bounce would be just around the corner. So that's my game plan. And again, in stocks, and like I said, in cryptocurrency, it's happened more than in stocks because levels got real extreme on that pullback from all-time highs. But in stocks, that very rarely happens to me because I space out my scaled-in orders to the point where most of the time, 1/3 or 2/3 of my position fills, and then the bounce gets going. And that's fine with me. I don't have a full position, but I'm still locking in profit. So that is my style of trading these oversold bounces, and that's what I'm going to be doing on IAN. So just as a refresher, I did this exact same thing back here. I entered one position of 3. It might have been 1 of 4. I forget back then. But I entered 2 total positions, either 2 of 3 or 2 of 4. It was probably 2 of 4. And then the bounce started. So I don't add into strength. I say, that's fine. I got half of my position. I scale out here. My break-even point drops down to pretty much below 591. I scaled out the next day on April 18th. And at that point, my break-even point of the trade is very comfortable. And I'm looking to do the same thing here once we get some sign of some short-term relief. And the first target will be the 12-period exponential resistance. We'll see how the price reacts to it. So I will probably add a position tomorrow. I am going to be traveling tomorrow, so that's going to affect what I do, but I'll probably put a bid in case the weakness continues, and that will be position number 2 of 3, and then we'll take it from there. C-Web. Bear flag. Bear flag on the daily. So the size of the pullback, and I'm just looking at this range right here, where we pulled back in 3 days, we dropped 26%. And then after that, we had 9 days of a bounce. 26% drop in 3 days, 9 days of a bounce made back 11%. Didn't even make back half of it. That is showing weakness. There was no bullish action here. There was no bull volume. There was no strong closes, nothing. So now we're looking back down at the low of 1952. And we broke, actually we held it by 2 pennies, but if that were to break tomorrow, we're looking down at 1894 and 1775. The weekly time frame has not found a higher low yet, and it certainly looks odd at this point, but it is a weekly uptrend. And the reason it's a weekly uptrend is because the last higher low is 1751. We saw a straight shot up. Every single week has been a lower high for 7 weeks in a row at this point. And if we hold this support of 1751, which I would assume we would on the initial test, the bulls have to be cautious of this head and shoulders pattern. And if that were to break, we zoom out to the monthly time frame, and we're looking for a monthly higher low because the last one was 1080, a long ways away. So I have no interest in CWeb, but we'll see if that 1751 support can hold, and we'll see if we do get that right shoulder forming on a bounce when it does hold, if it does hold. TRUL, a lot of space for bulls to work with to hold 1455. So the bulls are pretty pleased. We had the lower high on the daily, low of the dump. We topped out for a lower high at 1733, and now we need the higher low. Nice no bear volume. Lack of bear volume is a good sign, but we need the daily higher low compared to 1455. And right now, what's the hourly RSI? It's getting down there. So if we were to break $16 tomorrow, that hourly RSI would be getting oversold. And again, this is the kind of trade setup where we look for an entry. 1455 would be the stop, and then we look for a few percent bounce to try and see the tightening range continue. But hourly RSI, looking for a daily higher low when there's this much space to work with, usually is a pretty decent setup. So we'll see where the bulls can form that daily higher low. A spike in bear volume would be a bit of a red flag, but at this point, there is no bear volume around, and we're just looking to see, can the bulls get this weekly bounce some follow through? And to do so, we would have to confirm a daily trend change with a higher low and higher high. MedMen. So I've certainly been bearish on MedMen for many months, and the reason for that has been the trend. And I was interested in MedMen. You can go back and watch the intro to USMJ stocks video that I did 6 months ago. And I was interested in MedMen for the fundamental reasons. But I quickly lost interest due to, number one, the drama. I don't like drama in my stocks. And number two, the chart. And that has kept me from trying to establish positions in a very clear downtrend. So we broke to all-time lows. We knew there was limited support nearby. There's the clear bear break and volume spike on that new all-time low. And we are now in black dirt breakdown, and there is no support nearby. Things can get extreme. RSI is meaningless at these levels. We've got 290, 280, 270. Those are the levels that we're going to be looking at. And anything on the daily under 335 is just a lower high at this point. This is certainly the dog of the USMJ sector. And it doesn't look like that's going to change anytime soon. CL. So CL, we have to watch out for the head and shoulders pattern here as well. Things are tightening up. The bulls did not get much follow through. So this is a favorable situation for the bears because we had the low of the pullback, the all-time high, our higher low, and now our lower high was very quickly set at 1626. We certainly did not make it back to the midway point of this range. And actually, we already broke 1477. So now the only support is 1416. And you could say that the trend is definitely bearish. It's a confirmation of a lower high and lower low. The weekly time frame pulling back and losing the uptrend. Well, I take that back. We haven't lost it yet. If we break 1416, we lose the weekly uptrend, but it is still intact at this point. Bulls are going to do everything they can to try and hold on to that level. Anything on the daily chart under 1599 and 1626, these two little levels, is just a lower high. And hourly RSI, trying to see a short-term oversold bounce, but a lot of work on the daily for the bulls to try and regain momentum in their favor. GTII bear flag setup. This is the last thing I want to see when I'm scaling in, which I'm not on GTII. But if I'm scaling into IAN, and that's what I see, what that tells me is all those short-term RSI levels are cooling off and setting up for the potential of another leg down. The last thing I want to see is a bear flag because it just allows for further downside by cooling off RSI levels, which is why I scale out on the initial bounce, and hopefully I'm locking in some profit. Otherwise, maybe I'm locking in some break even to protect against the bear flag. So here on the hourly time frame, RSI was oversold to start the morning. That one candlestick cooled off that RSI from 20 all the way up to 45 or so, and now we're just fading right back down to the recent low. 1528 and 1533 is a double bottom to be watching, but if those levels break, the bears continue to keep complete control. 1622 is resistance, followed by 1717, but on any bounce on the daily time frame, anything under 1779 is just a daily lower high, and the bears are still in firm control of GTII. So we have the USMJ sector selling off in a big way for the most part, which is when I like to establish long-term positions, which is why I'm interested in IAN. HARV, also a bear flag. So again, just RSI levels. Look at what the 4-hour RSI has done. Multiple days ago, it was oversold when the price was 1010. And now the price is under 1010 and the RSI is higher. A lot of people would say, well, that's bullish divergence with the RSI. For me, it just says we've had short-term bounces that cool off the RSI level and allow for further downside. So if we see a bear break of 969, that bear flag on the daily is confirmed, and we're then looking down at 926 as the next support level, and we're going to call our new daily lower high up here at 1056. Anything under that level is just a daily lower high, keeping the bears in control. ZYNE, daily chart, tried to see continuation and failed, and now we have the bear break. We had the 4-hour pattern that we were watching. As soon as 1411 breaks, that confirms that further consolidation is needed. You could call that a loss of the daily uptrend with a little lower high and lower low, but really we just need some weekly consolidation. Very overdue. We have not consolidated on the weekly time frame since all the way back at 450. So we are looking for healthy weekly consolidation. Daily chart, nothing really notable aside from support at 1427, and then we're looking down at 1135. Hourly RSI, short-term bounce. If we can change the hourly trend, we'll look for a daily bounce, but anything on the daily under 1555 is just a lower high at this point. So we'll see how much downside the bears can come away with. And again, worth scouting for a weekly high or low, but it could take a while for that to form. It could take a week or two. And last, we'll wrap it up with the KHRN. Certainly holding on pretty well. We need a weekly break of this tight range. We have our low, high of the weekly, higher low, and looks like our lower high might be 336. Bulls must hold 287 support. So looking at that on the daily time frame, we'll call this our lower high, 336. Bulls must hold 287 and break 336 to change this daily trend in their favor. Otherwise, we zoom out to the monthly chart and look for further monthly consolidation to form a higher low. Again, cannot stress enough how the monthly time frames are great guides for the sector with where we stand currently. And again, just a point for if you are looking for long-term positions. We're all bullish the USMJ sector in the sense that we know there's going to be law changes. We know there's going to be banking reform. It's just a question of when. So I certainly wouldn't say that anybody that's establishing long-term positions as a swing trader that doesn't want to pay attention to the daily action, I certainly wouldn't say that it's a bad idea to be entering into this weakness. Like I say, I would much rather be entering into a long position in daily oversold conditions, as long as we're in a monthly uptrend, as opposed to in blue sky breakout conditions. But it just is a testament to not putting all your eggs in one basket. Number one, diversifying individual names, but number two, scaling in. We cannot put the burden on ourselves to nail the bottom because we're not going to nail the bottom. So scaling in, whether it's one entry a week, one entry every 2 weeks, one entry every 10% drop, whatever it is, just do it slowly because this pullback can be prolonged and it can seem like forever. And we just went through that in cryptocurrency. Cryptocurrency just pulled back from the all-time high for about 14 months before we shifted that momentum. And we knew there was going to be 100% gain off the bottom in cryptocurrency. It was just a question of where's the bottom. And just like that, we see 150% gain off of the bottom in less than 2 months. So there will be gains to be had in this USMJ space. And it's just these cycles. It's just the emotional cycle of the market. And right now we have a whole bunch. It's not necessarily fear because we're not seeing huge dumps. As I've been saying, in my opinion, the fear will come from the S&P 500 if we're going to see fear. This pullback has been slow and steady enough that I wouldn't exactly call it fear, but I would call it, a lackluster market. I mean, I can see it in the video views where the video views just keep dropping because people are losing interest. It's not exciting. The views shoot up when the bulls are out, and when the bears are out, the views fall off because people aren't excited, and it's boring, and it's depressing to look at accounts if they keep dropping. And it's just the market cycle that will shift. And the question is, when is it going to shift? And in my opinion, fall, as always, as the cyclical sector has shown us for a decade. But aside from that, S&P 500, once we see a base of support established, once we see perhaps the trade war fears alleviated, that is a sentiment shift to be keeping an eye out for as well. So I appreciate you watching. Doing the US video now. Gonna end with some praying mantis babies. Praying mantises are great for the garden. They eat all the pests, and they eat all different sizes of pests throughout their life cycle. So I released hundreds of them into the garden, and I saw them everywhere for the first week or so. And they're not good hunters when they start out young, that's for sure. I saw a couple try some strikes at some aphids and ants. Didn't go well. But we'll see if I see them in a month or two when they're bigger. And another really beneficial pest, or another bug, is wasps. Almost all wasps are beneficial to have in your garden. And people don't like wasps, and they think they don't do anything. There are wasps that specifically eat what's the spider with the hourglass? Black widows. There are wasps that eat black widows. There are wasps that eat tons of pests in your garden. So if you have a garden, wasps are welcomed. So that's all I got. Do good things. We'll see you tomorrow. I'm going on vacation to the beach. Videos will probably be sparse over the weekend, but I'll do what I can.